Good morning from Chicago traders. It's 8:02 a.m. Chicago time on Tuesday, the 12th of October, 2021. This is episode number 2092. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Hopping on over to the convergent trading pre-market summary sheet, which isn't showing up here. Let's see what's going on. Hang on one second. What is the deal? Just one second. Something's going on with this. Apologize for this. It's always a pain when this happens. Here we go. What we have is a mixed. Sounds a little high. Okay, thank you. Chip. What we have today is a mixed market. The indices in the U.S. actually pushed lower and recovered. We have pushed well below yesterday's settlement. Remember, yesterday's settlement was around 43.51, 43.50 being a key figure in the ES, and then bounced off of 43.17, and we are trading. We pushed as high as 43.65, where we found an iceberg up there, and we put in this really extremely weak high, having traded about 1,500 contracts at that price before pulling back. But overall, mixed market. The Europeans have not recovered yet. Out of Europe, we got the UK, the Great Britain claimant count change, which came in slightly better, a lower negative number, 51.1 thousand versus a forecast of 46,000 negative. And the unemployment rate went to 4.5 from 4.6 prior. We also got the zoo economic sentiment out of Germany came in at 22.3. The consensus was 24. The forecast was 22.6. We did have some ECB speakers this morning. One of them is speaking currently. ECB's Ellerson, but we also have the JOLTS job openings 10 today. That could be a mover as well. It's an employment figure. And then we're left with China's exports and imports as the next key figure for today. Overall, Q3 earnings season starts tomorrow, I think, with JP Morgan tomorrow morning. Energy prices remain elevated. There's a slight improvement in the supply chain bottleneck. There are some moves being made to help relieve it. So that's pretty decent news. Overall, there's not much for the market to move on. It's kind of if you look at the media or you look at the financial press, you're going to always find some reason that the market has moved up or down. But overall, there's not much to factor in here. Not much to explain why the big reversal happened yesterday. But here we are. In the S&P, we have a multi-distribution profile. Overnight, we've traded with a neckline at 43.42 currently, which is where the mid and VWAP are resting currently. This is the early line in the sand. 43.42 is the early line in the sand for the ES. We've traded 275,000 contracts and 47.75 points of range, which is well above the first standard deviation of range on the last 252-day sample. The overnight inventory is short 37%. That is 37% of the volume occurred below the prior day's settlement. The high overnight's 43.65. The low is 43.17. The point of control has just shifted up from 43.33 to 43.54.75. That's pretty much it. Earnings, we have Fastenal. Remember earnings, I'm filtering out companies that have estimated revenue of less than $1 billion. I don't really look at the smaller companies, even if they are media darlings or whatever. They're not going to have that much of an impact on the overall picture, so I filter them out. Let's move on to what was expected yesterday. Remember yesterday we talked about the fact that we had this, what is going on, man? We have this normal distribution pattern that was left behind on Friday. And then Sunday night, we opened, we pushed higher, we created this W-shaped pattern, and the expectation is it's likely to resolve to the upside. I'm looking for a push higher, and a modest target was 91.92, 91.92 before the reversal back to the overnight point of control. The overnight point of control is expected to be tagged. It's at 43.70. My estimates here are based on what I expect the market to do and based on historical volatility. Here's what actually took place. Um, Here's what actually took place yesterday. Sorry, I'm losing my voice. It's been a couple days now. I think it's allergy season with the fall of the leaves. So here's what we got yesterday. We got a strong push. We had an open auction, a very clean, clear open auction. The auction extended to 43.82. Actually, we could have moved our opening swing high to 43.82. In either case, we had an open auction right out of range by a tick, and essentially we opened just one tick below the prior day's low, and then we had this nice throttling across the entire value and balance range of Friday. We traded on the other side of Friday. So I expected this thing to push to about 43.91, somewhere in here. This is where I expected it to push, consolidate, and roll over, and then start to move back towards the 43.70, which is this zone right here. That was yesterday's scenario one. Instead, it actually busted right through the entire balance range, which is really unusual, to go above 4,400, which was here, pushed to 4407, and it actually created a really nice um, setup short on this impulse. I did not catch this lower high. There was no way to tell that the next move would be an impulse down. We got our biggest sell impulse of the day at that point, and then the only trade that actually set up was the 91 short. 91 short, looking for 83 as the key target below, and this thing ran way over. So we ended up selling in the afternoon, and we did so on pretty good volume. There was a news event that took place, and that was the crackdown by China on pretty much capitalism at this point. Any company that is doing important work or has a significant impact on the economy in China is now under a microscope. And we saw that reaction somewhere around here when it came across the squawk. In either case, we ended up finishing very weak. We ended up pushing back to 43.50, which is the MC point of control. You can see it on the profile here. So the zone that we want to pay attention to here is 75. I talked about this before. 75 to 50 to 50, and then above we have a zone to 4407, 4409, 79. And that's where we stopped yesterday. That's a low volume node here. So this is a neckline. This is a neckline. We rise up, and then we have a neckline below around 20, 15, 20. And tonight's low is at 17. And what we've been doing is we've been moving from low volume node to high volume node to low volume node to high volume node to low volume node and back overnight. We moved back, and then currently we're trading at 43.62, so we are holding right here. This auction has been quite orderly. You'll notice that delta is moving with price. You can see the delta moving up and then reversing back with price and finishing quite negative. The expectation overnight is that we would likely see how much volume went off on the close there. We would likely continue lower with 43.15, which happened to go to 43.17. 43.15 being the target below. So we reopen. We immediately push lower in the Asian session, a pullback. So we have an impulse pullback, broke through the mid here, a continuation, and we have a reversal pattern. And we've put in a very weak high, a very weak high. Look at this high right here. Look at the volume on the high. This is pretty much a ledge, and by that I don't mean legend. This is pretty much a ledge here at the high overnight. It has traded 1,496 contracts right at the 43.65. If you recall, the 43.65 has been in play for some time. And so this tells us that there's quite a bit going on in that area. There is an iceberg of 43.65, but that's left us with a weak high, and that becomes the key target on the open. We expect this high to go. A market that finds sellers does not trade all that much on that high. It would create an excess. An excess looks more like this. As it reaches lower prices, it dries up. Nobody's interested in trading, and then it reverses to the other side. And here what we have is a flat top. And so I'm expecting this to revert back and push towards yesterday's high volume node and lower distribution right here. That would be the 43.68 or so. That's the key area to test just above, and then from there we push right on through to 43.80, and then from there it's 4400 and then the high. We'll see how it does over the next 20 minutes or so, but the overnight session has clearly experienced the reversal and has a channel pushing back up to where we started yesterday. So that's how things are set up. There's not much more for me to cover here except to go over what's expected for today. Yesterday, we made a higher high and a lower low, and we ended up having a bearish engulfing day versus Friday's RTH session, the pit session. So yesterday would be seen as relatively bearish by most participants. Here's what we're expecting for today. This morning, the expectation is an open auction in range, in yesterday's range, at the lower end. I'm looking for this thing to try to struggle at the 65 and push into this 83.70, but I'm looking for it to reverse back to the overnight point of control and retest. Remember, the action yesterday was a trend day type action. Yesterday did not establish balance. It did not establish a value area. It did not establish anything. Yesterday was a fully 100% price discovery up and down. And so overall, I'm expecting this low from yesterday of 43.50 to be challenged, and that's scenario one, is to challenge that down into the 33.35. If you recall, 33.35 from a couple weeks ago, 33.35. Consolidate down here for the bounce into the close. That's what I'm expecting for today. Scenario one is to push higher and then continue yesterday's work to the downside. That would be the natural thing to do, although scenario two, the reversal, what we've done recently is we've pushed, reversed, then we reverse the reversal, and then we come in and reverse that reversal. So we haven't seen all that much continuation type work immediately. It ends up happening later in the session. So the scenario ends up showing up much later, but that's just the way this thing's playing out. The secondary scenario, open auction dips into the overnight point of control for the overnight point of control stat at 55. I expect a tag of the prior settle. I expect it to dip below, come back up and in on an impulse, consolidate at the open, and then start to challenge that 65. And then what this would do if we push back earlier and start to challenge the 65 and get through the 68 up here, what this will do is it'll likely set up a good base from which to rally. In other words, we have checked for sellers down below. We checked the sellers and looked for buyers down below, successfully found buyers early, and so now we can throttle back up and push ourselves back to 43.82 from about 43.40. That's well within the day's range. That's scenario 2 right there. I don't know why I'm drawing on the margin here, but I'm ready for either one. The key figures to pay attention to are 65, the week high, 68, the high volume node down here, and then from there it is 75, 80, and then it's pretty much free and clear to 91. This is the MC point of control, 91, 92. Remember from yesterday, 92. And then a challenge of the low volume node at 4407.50, where the high was yesterday, 4407.08. That's the map upwards. The map below is 50, pushes to 33. 35, if it extends below, then you're looking at 20 and 15 as the next key areas below. These are the levels that I'm going to look for reactions at. These are the main reaction areas, so I'm looking to stock in those areas. I don't trade in the middle. I don't diddle in the middle. Okay. Good luck today, and I'll catch you tomorrow. Oh, and don't forget, this Thursday I'm talking at 4:30 Eastern after the market closes. I'm going to be doing a webinar with EdgeClear on selecting your market data. So there are all kinds of market data. There's data that's execution feed. There's data feeds. We'll be talking about exchange fees, how those work, when you're classified as professional or non-professional, what the consequences are, all that stuff. Which is very confusing to those folks coming into futures. We tend to have a complex structure. We'll be covering that on Thursday. To sign up, it's ft71.com/select-data. Good luck.